Well, hello everyone, and welcome to your Daily Five. I'm Joe Duarte from Joe Duarte and the MoneyOptions.com, author of the best-selling Options Trading for Dummies, the Everything Investing in Your 20s and 30s. If you'd like what you see today, please consider a free trial to my website, Joe Duarte and the MoneyOptions.com. Get started. We have a lot to go through today. Today, I want to discuss some hands-on trading techniques, specifically determining the strategic entry and exit points that you can use to make money in shifting markets. So the goal of this presentation is diagnosing trading bottoms and deciding when and how to act. So what we want to do in order to do that is to gauge the fear in the market. We want to know who's in charge of the trend. We want to be able to measure liquidity reliably. And then we want to set entry and exit points to make sure that the trade is favorable. So as usual, we have some sound trading principles, but today I modified them a little bit for shifting markets. Of course, the biggest one of them all always is don't fight the Fed. And for shifting markets, you want to be a little bit more patient than usual. You want to wait for those opportunities to present themselves and not front run them, because if you front run them, you're going to lose some money some of the time, and that becomes very frustrating. So you want to really specifically focus on what you trade, on trading what you see in the charts. Always focus on that capital preservation. You want to adapt your time frames to market trends. You never want to let those winner turns and losers. You want to use those sell stops because we want to survive to fight another day. All right, so first thing we want to do is look at market catalysts. The first one, of course, is sentiment. Are we at a bullish or a bearish extreme? And the second one, which is actually even more important, is liquidity. Is there enough market? Is there enough money in the market to move stock prices higher? So there are several ways to look at fear. One of them is the CNN Greed and Fear Index. You can find that on the web at your favorite CNN Greed and Fear Index link. And today it's at 14, which is a bearish extreme, and that's very favorable if you're looking for a market bottom. The traditional ones, of course, are the put-call ratio. I'm going to discuss that in detail, and the CBOE volatility index. But the key is that the first most important ingredient in a market bottom is there enough fear? So when fear is running high, you want to be thinking about the volume and put options and the effect of the counter trades. And I'll talk about this in a little bit of detail here. You can see the CBOE volatility index. This is a great indicator of put volume. When it rises, the number of put volumes being bought is high. And what does that do to the S&P 500? Well, you can see right here, the S&P 500 going straight down as the put volume is rising. So that's an important key right there. Same time, look at the put-call ratio down here. You can see that we had a big spike in put-call ratio as the put volume was going up. And a little bit of a contrarian indicator here, because as this VIX CBOE volatility index indicator started going sideways, the market's trying to make a bottom. So you want to think that when put volume is rising, that's bad for the markets, because the market makers are selling stock index futures in order to hedge the put sales that they have to deliver for people buying puts. So it sort of becomes a self-fulfilling prophecy. So that brings us to who's in charge of the markets. Are the buyers, the sellers, or the short sellers in charge? And remember, in order for a market to rally, the selling has to stop, the short sellers have to cover, and real buyers have to follow. So those are the three important things that have to happen mechanically in order for us to have a market rally. So let's look at this in some detail. Who's in charge, buyers, sellers, or short sellers? This is the S&P 500, and the accumulation distribution indicator is a great way to look at what short sellers are doing. All right, as long as the accumulation distribution is falling, the short sellers are active. The unbalanced volume indicator is a great indicator of what buyers are doing. You can see that even though short sellers haven't been particularly active along the way for most of this major decline, there just haven't been any buyers. So even though the short sellers are sitting the rally out or the decline out, what matters most is what buyers are doing, because the market just can't get any legs. You can see here that we had a big increase in short sell, a big reversal in short selling. and that the market rallied, but the buyers never really materialized. So we had this big failure here. All right. Now, next thing we want to look at here is support and resistance. We are now at a major area of support down here around 3,600 on the S&P 500. And you can see that the volume by price, however, has a lot of resistance. So unless we get a lot of buyers coming into this market, it's going to be difficult for prices to go higher because there's so much resistance here as depicted by the volume by price indicator. So the next thing is liquidity, and I've gone through this in previous videos, and I recommend them highly because they're more detailed about this. But the take-home message is that without liquidity, there is no rally, because that's the money that's in the system that's available for trading and doing business. And remember, momentum comes from liquidity. High liquidity is bull markets. Low liquidity is bear markets. So let's look at the really, really big macro picture before we jump into the trading part of the tutorial here. Again, a quick look at market sentiment. Lots of put buying. CBOE volatility index rising. New York Stock Exchange advanced decline line falling. No mystery here. High puts. Market makers sell puts. They sell stock index futures. Market falls. The problem with the lack of this market's ability to rally is liquidity. Look at this. The euro-dollar index, an indirect but very reliable sign of market liquidity, continues to fall. So we now have a very oversold market here with an RSI near 30. It is trying to bounce. You can see the advanced decline line trying to make a bottom here, but we want to see this liquidity thing improve, or else we're going to have some trouble in making this rally last. So we know all that, and we want to set ourselves up for trading because you never know when things are going to turn around. So I like to use the principle of this happens to this. And that means you pick your indicators, you pick your trading vehicle for when the trend changes, and you're always looking at them, reviewing them like clockwork. Then you define those entry and exit parameters, and you have no fear because you've gone through all this and you have your precise entry and exit points already sorted out. So I've done this kind of work before with the S&P 500. Today I want to do it with the NASDAQ 100. So I'm using the ProShares Ultra Q QQQ ETF, which is symbol QLD. And again, let's review what we've got here before we do anything else. Again, you see that the general tendencies, when they're short covering on ADI, market rallies, we saw a nice neutral or even slightly bullish increase in on-balance volume. The rally took off. As soon as the short sellers came back, the rally unraveled. Okay, pretty straightforward. Now, the volume by price is even more dramatic here. Now we're trying to find that support around 37.50, and right around 40 to 42.50, you see the 20-day moving average there, and you also see this big resistance bar. That's when things are going to get interesting. So because we may have a slight improvement in buyers, look at on-balance volume trying to rise, we certainly have the beginning of some short covering. You want to start looking at that 40 area as a place where you can put a little bit of money to work. How much money to put to work is up to you, but if you had $10,000, you really don't want to put more than a couple of thousand into that first entry point. Just an illustrative kind of a pointer there. Okay, and again, we have an oversold market. We have buyers that are trying to come in. We have short sellers that are trying to make a decision here, and we're at a critical support area. So this is the area where we want to start looking at whether we want to enter this market or not. So to recap, the most important thing is to figure out who's in charge. Okay, you want to look at the volatility index, New York Stock Exchange advanced decline line. Please look at that liquidity indicator, see if this rally or any rally in the future is going to have a chance of succeeding for the long term. The S&P 500 is a great place to get a big macro picture. All right. From the nuts and bolts standpoint, though, the selling has to stop. The short sellers have to cover, and real buyers have to follow. And we have those indicators that tell us when all this is going on. So you have to plug that into the formula. Then you got your trading vehicle, and you've got your entry and exit points that you've already figured out. And then you wait for that follow through. So the bottom line, when sentiment and liquidity line up, prices follow. Remember, Eurodollars are the key to understanding whether you're going to have enough momentum in the market. And of course, VIX measures sentiment. The CNN Green Fear Index is also helpful. The New York Stock Exchange Advanced Decline Line, the S&P 500 are great ways to get that macro feel on the market. So when you're ready to pull the trigger, you have as much on your side as possible to make the trade successful. That's all I have for today. I'm Joe Duarte from Joe Duarte and the NYAD.com, author of the best-selling Option Trading for Dummies, now in its 4th edition. If you like what you see today, please consider a free trial to my website, Joe Duarte and the NYAD.com. Remember, trading is uncertain. You always have to be prepared.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.